There is something happening right now across Australia that most pensioners are completely unprepared for, and I do not say that to alarm you. I say it because the evidence is right there in the numbers, in the debt notices being issued, in the letters arriving in letterboxes from Centrelink, and in the phone calls flooding into financial counselling services from people who are shocked, confused, and frightened about what they have just received. Centrelink compliance checks are accelerating. They are becoming more sophisticated. They are reaching further back in time than ever before, and they are catching people who genuinely believed they were doing everything right. If you are currently receiving the age pension, the disability support pension, carer payment, or any other Centrelink payment, this video is for you. If your partner, your parent, or your friend is receiving Centrelink payments, please share this with them, because what I am about to walk you through could save them from a debt notice they never saw coming. I am Professor David Hensher, and today we are going to cover everything you need to know about Centrelink compliance checks, what they are, how they work, what triggers them, what Centrelink is looking for, what the consequences are if they find something, and most importantly, what you can do right now to make sure you are protected. We have a lot to cover, so let us get straight into it. Let us start with the basics. What is a Centrelink compliance check? A compliance check is essentially an audit of your payment record. Centrelink reviews the information you have provided against information it receives from other sources to determine whether you have been receiving the correct payment amount. The check can be triggered automatically, it can be triggered by a data match, or it can be triggered by a tip-off or a complaint. And in many cases, the person being reviewed has no idea it is happening until a letter or a phone call arrives. Now here is what most pensioners do not fully appreciate. Centrelink does not operate in isolation. It has formal data sharing arrangements with the Australian Taxation Office, with financial institutions, with state and territory revenue offices, with the Department of Home Affairs, with the Registrar of Births, Deaths and Marriages, with superannuation funds, and with a range of other government agencies. Every year, enormous volumes of data are exchanged between these bodies. And Centrelink's systems compare that data against what you have told them. When there is a discrepancy, a flag is raised. That flag may sit in a queue for weeks or months before a compliance officer looks at it, but eventually someone looks at it, and when they do, the review begins. Often going back, not just 1 year, but 2 years, 3 years, or even further depending on the nature of the discrepancy. Now let us talk about what Centrelink is actually looking for when it conducts a compliance check. There are several key areas that consistently come up, and understanding them is the first step to making sure you are not caught out. The first and most common area is undeclared income. This includes wages from casual or part-time work that were not reported fortnightly, interest earned on savings accounts or term deposits, rental income from a room or a property, dividends from shares, income from a family trust, and income from any business activity, however small. If money came into your household and you did not tell Centrelink about it within the required time frame, that is an undeclared income issue. The second area is asset changes that were not reported. This includes receiving an inheritance, the value of your superannuation balance increasing significantly, purchasing a new vehicle or caravan, acquiring an investment property, or any other situation where your assessable assets changed and you did not update your Centrelink record. Centrelink's assets test is not a one-time snapshot. It is supposed to reflect your current situation at all times. The third area is changes to your living arrangements. If you moved in with a partner without telling Centrelink, if a partner moved out, if someone moved into your home and is contributing to household expenses, or if your relationship status changed in any way. These are all reportable changes. Centrelink's rate of payment varies significantly depending on whether you are assessed as single or as a member of a couple. And if your living situation changed and you continued to receive the single rate, Centrelink will want that money back. The fourth area is the principal home and property arrangements. If you sold your home, moved out of it, started renting it out, or made changes to how your land is used or titled, Any of these changes can affect your pension eligibility. And if those changes were not reported, they will show up in a compliance check. Now, if you are watching this and already feeling a little uneasy, that is actually a healthy response, because that unease is telling you to pay attention. If you are finding this useful, and you want to make sure you do not miss any of our upcoming content on protecting your pension and understanding Centrelink rules, please subscribe to this channel right now and turn on notifications. These rules change, these compliance activities intensify, and staying ahead of them is the most valuable thing you can do. Now let us keep going. Let me talk about how the data matching works in practice, because this is where a lot of people are surprised. You might assume that Centrelink only knows what you tell it. That assumption is wrong, and it has been wrong for many years. But the scope and speed of data matching has expanded dramatically in recent years with improvements in technology and interagency cooperation. Here is a practical example. You have a savings account at your bank. Every year your bank reports to the Australian Taxation Office the interest earned on all accounts. The ATO shares that information with Centrelink. If the interest you earned is significantly higher than what Centrelink would expect based on the financial assets you have declared, a discrepancy flag is raised. Centrelink does not need to contact you first. It already has the information. It simply needs to calculate whether you were overpaid and by how much. Another example, you receive an inheritance. The estate is administered through the legal system, which involves probate records. Those records are accessible to government agencies. If a significant asset transfer is identified and it does not appear in your Centrelink record, a compliance review can be initiated. The same applies to property transactions. Every property sale and purchase in Australia is registered with the relevant state land titles office. That data is available to Centrelink. If you sold a property and did not report it, or if you purchased a property and did not declare it as an asset, Centrelink is likely to find out. Superannuation funds also report balances and transactions to the ATO, which in turn shares relevant data with Centrelink. If your superannuation balance increased substantially, perhaps because of strong investment returns, or because you made a contribution, and your declared assets did not reflect that change, Centrelink will see the discrepancy. Now let us talk about what happens when Centrelink finds a discrepancy, because this is the part that creates the most distress, and understanding the process can help you navigate it without panic. When a discrepancy is identified, Centrelink will typically send you a letter or contact you by phone, asking you to provide information or attend an interview. This is called a customer compliance interview or a review of your circumstances. At this point, it is critical that you do not ignore the communication. People who ignore Centrelink's requests for information often end up with their payments suspended while the review is conducted. That means no money coming in while the process plays out, which can take weeks. During the review, Centrelink will look at the discrepancy and ask you to explain it. In many cases, there is a legitimate explanation. Perhaps the data Centrelink received was incorrect. Perhaps the timing of a transaction was misunderstood. Perhaps there is a genuine reason why your assets or income appear different from what you declared. You have the right to provide that explanation, and you have the right to seek assistance in doing so. A financial counselor, a social worker, or a legal aid service can help you prepare your response. If Centrelink determines that you were overpaid, it will raise a debt. That debt is the amount Centrelink believes it paid you above what you were entitled to receive. And here is the part that shocks most people. There is no time limit on how far back Centrelink can go when raising a debt. If the overpayment resulted from fraud or deliberate concealment, Centrelink can potentially go back many years. Even for non-deliberate errors, the debt can cover several years of payments, and the total amount can be tens of thousands of dollars. Now I want to address the question I hear most often from people in this situation, which is, what if I genuinely did not know I had to report something? What if it was an honest mistake? This is an important question. And the honest answer is that Centrelink does distinguish between deliberate fraud and genuine error. If you can demonstrate that you did not understand your reporting obligations, that you did not intentionally conceal information, and that you acted in good faith, Centrelink does have discretion in how it handles the debt. You may be able to negotiate a repayment arrangement rather than having to repay the full amount immediately. In some cases involving significant hardship, you may be able to apply for a waiver of all or part of the debt. But here is the key point. Those outcomes are not automatic. They require you to engage with the process, to advocate for yourself, or have someone advocate for you, and to provide evidence that supports your position. The worst thing you can do is ignore the situation or assume it will resolve itself. It will not. Debts that are ignored do not disappear. They accrue interest, they are referred to collection processes, and they can eventually be deducted directly from your ongoing Centrelink payments, sometimes at a rate that leaves you with very little to live on each fortnight. Let me pause here for a moment, because we are halfway through, and I want to make sure this information reaches as many people as possible. If you know a pensioner who has recently received a letter from Centrelink, or who has been worried about a compliance check, please share this video with them right now. The information we are covering today is not found in any single Centrelink pamphlet or website. It takes years of working with this system to understand how it actually operates. Share it, subscribe, and let us keep going. Now let us talk about something that a lot of people do not consider, and that is the compliance risk that comes specifically from relationship changes. This is one of the most sensitive areas of Centrelink compliance, and it is one of the most actively monitored. If you are receiving the single rate of the age pension and you begin a relationship where you and another person are living together as a couple, you are required to notify Centrelink. The definition of a couple under Social Security law is broader than most people assume. It does not require marriage or a registered relationship. Centrelink looks at a range of factors, including whether you share finances, whether you share a household, whether you present as a couple in public, whether you have a sexual relationship, whether you care for each other, and whether other people in your community would consider you a couple. You do not need to satisfy all of these factors to be assessed as a couple. Centrelink looks at the overall picture, and if it determines that you have been in a de facto relationship without disclosing it, the overpayment calculation goes back to when Centrelink believes the relationship began. Given that the couple rate of the pension is lower than two single rates combined, the difference can be substantial over months or years. This is a particularly sensitive issue for older Australians who have lost a partner and may have formed a new companionship or relationship. The reluctance to report a new relationship is completely understandable, both emotionally and financially. But non-disclosure carries significant risk. And if a compliance check is triggered, the investigation into relationship status can be thorough, including reviewing social media, interviewing neighbors, and examining shared financial transactions. Now let us talk about the granny flat and property transfer compliance risks, because this is another area where compliance checks are catching people who believed their arrangement was perfectly fine. When a pensioner transfers their home or a significant sum of money to a family member in exchange for accommodation and care, Centrelink assesses this as a granny flat interest. The assessment looks at whether the value transferred was reasonable compared to the accommodation received. If Centrelink determines that the value transferred was excessive, it applies deprivation rules, treating the excess as an asset that you still own, even though you no longer have it. In 2024 and 2025, Centrelink conducted a significant number of reviews of granny flat arrangements that were established years earlier and never formally assessed. Many of these arrangements were set up informally, perhaps without any written agreement, or with an agreement that did not reflect the true value of what was transferred. When these arrangements are reviewed during a compliance check, the outcomes can be devastating. Pensioners have found themselves with large deprivation amounts added back into their assets test, pushing them over the threshold and resulting in significant overpayment debts. If you have a granny flat arrangement, whether you moved into a family member's property or they moved into yours, and that arrangement has never been formally assessed by Centrelink, you need to address this proactively. A proactive disclosure is always treated more favorably than a compliance discovery. Let us now talk about the compliance risks around self-managed superannuation funds, because this is an area that catches a significant number of pensioners who are relatively asset wealthy. If you have a self-managed superannuation fund, you are responsible for managing and valuing its assets. Centrelink assesses the value of your interest in the fund as part of your assets test. The challenge is that SMSF assets can change in value between reporting periods, particularly if the fund holds property, unlisted shares, or other investments that are not priced daily by a market. If your SMSF has increased in value, and you have not updated your Centrelink declaration to reflect that increase, you may be receiving more pension than you are entitled to. Centrelink now receives regular data from the ATO about SMSF annual returns, which include asset valuations. If the valuation reported to the ATO differs significantly from what you have declared to Centrelink, a flag is raised. And because SMSF asset values can move substantially, particularly for funds holding commercial or residential property, the resulting overpayment calculations can be large. Now let us talk about what you should do right now, today, to reduce your compliance risk and make sure you are protected. The first thing is to review everything you have currently declared to Centrelink. Go through your MyGov account and look at the assets and income you have on record. Ask yourself whether that information accurately reflects your current situation. If it does not, update it immediately. Do not wait. The update itself is not an admission of wrongdoing. It is simply your obligation as a payment recipient, and doing it proactively is always better than having Centrelink find a discrepancy in a data match. The second thing is to go back over the last 5 years and think about whether anything significant happened that you may not have reported. Did you receive an inheritance? Did your relationship situation change? Did you sell or acquire a property? Did you start or stop casual work? Did you receive a lump sum from any source? Did a family member transfer money or assets to you? For each of these, ask yourself whether you reported it to Centrelink within the required 14 days. If you did not, consider seeking advice about how to address it now before a compliance check finds it first. The third thing is to make sure your reporting habits going forward are airtight. Every fortnight, if you are required to report, do so accurately and on time. If your circumstances change between reporting periods, do not wait for the next scheduled report. Log into MyGov or call Centrelink and notify them of the change immediately. Build this habit now. It is not onerous. It takes minutes. And it protects you from consequences that can take months or years to resolve. Now I want to talk about your rights during a compliance check, because too many people do not know what they are entitled to when Centrelink comes calling. You have the right to take time to gather your information before responding to Centrelink's questions. You do not have to answer on the spot in a phone call if you are not prepared. Ask Centrelink to send the request in writing so you have a clear record of what they are asking. You have the right to have a support person present in any interview or meeting with Centrelink. This could be a family member, a friend, a financial counselor, or a legal representative. Having a support person is not suspicious, it is sensible, and a good support person can help you understand the questions being asked and make sure your answers are accurate and complete. You have the right to request a review of any decision Centrelink makes. If you disagree with a debt that has been raised, if you believe the compliance review reached the wrong conclusion, or if you believe Centrelink applied the rules incorrectly, you can request an internal review, and beyond that, you can appeal to the Administrative Appeals Tribunal. These processes exist precisely because Centrelink makes mistakes, and the mechanisms for correcting those mistakes are available to every payment recipient. You also have the right to seek free advice. The National Debt Helpline, community legal centers, and some financial counseling services provide free assistance to people dealing with Centrelink compliance issues. You do not have to navigate this alone, and getting the right advice early can make an enormous difference to how your situation is resolved. Now, before we close today, I want to step back and say something about the bigger picture. Centrelink compliance is not the enemy. The system of compliance checks exists because public funds need to be properly managed and payments need to go to the people who are genuinely entitled to them. That is a reasonable principle. But the way compliance is sometimes conducted, the shock of unexpected debt notices, the complexity of the rules, the technical nature of the reporting obligations, and the severity of the consequences for honest mistakes can feel deeply unjust to people who have done their best to do the right thing. If you have found yourself on the wrong side of a compliance check through genuine error, through a misunderstanding of the rules, or through not knowing what you did not know, that is not a character failing. It is a reflection of how complicated this system is, and how inadequately it is communicated to the people who depend on it. What matters now is how you respond. Engage with the process. Seek advice. Advocate for yourself. Know your rights. And from this point forward, make sure your Centrelink record is accurate, your reporting is timely, and you understand your obligations clearly. If this video has helped you today, please give it a thumbs up and share it with someone who needs to hear this. These are conversations that do not happen often enough, and the more people understand how Centrelink compliance actually works, the better protected our community of pensioners and payment recipients will be. Leave your questions in the comments below, and I will answer as many as I can. Subscribe to this channel and turn on notifications so you never miss an update. I am Professor David Hensher. Your entitlements are worth protecting, and knowledge is the most powerful tool you have to protect them.